Hello and welcome to today's silver and gold chart analysis video for Saturday, the 27th day of July, 2013. And before we get into the charts, let's go into probability odds and get the best levels or best numbers we could possibly get. So there's three questions on here. First one, what are the chances the fiat currency economic model will be in full function as at A, the end of the week? Therefore, what's the chances the dollar completely collapses by the end of the week? 1 in a million? 1 in 100,000? Another way of saying, if you are preparing for such an event, you probably have more than a week to prepare for it. Myself, I've been preparing for it for 5+ years. It has been that long. B, the end of the month. A little over a month because July is not quite over. Well, the chances is still less than 1%. The end of the year, 2013, which would include a little over 4 months. It's a little more possible, but still it's very likely the economic model of the fiat empire is still in full function on New Year's Eve. 2019, the end of the decade. Well, now that might be a little bit of a different story, and the end of the millennium, not everything lasts forever. Question number 2. Has there ever been an honest economic model in this world post-Atlantis? Now, whether there was during, I'm going to say, the mythical Atlantean time, and I have no idea if that stuff was even real or not, or if it was honest back then. We live in a society filled with a lot of dishonesty, that if we ever do have an honest economic model, it would be the first time in history in my books. And C, what processes are vital for an honest economic model to exist? A few questions to ask yourself. And we're still not done yet. Let's go through a fourth question. Over time, which of the following can have zero or negative equity? A, paper currency. Now within that, we have seen older paper currencies go to zero equity. The Weimar Republic, even in Zimbabwe. In fact, every single paper currency of the past has only one value to this date, and that is numismatic collector value. B, fine silver. Will fine silver still have value a week from now, month, year, decade, century, millennium? I'd have to say yes. How about unopened bottles of whiskey? Will that stand the test of time? How about an apple? Give me an apple, put it on the counter, get back to it 4 years later. How does it look? Crude oil. Then you have digital currency, which isn't the same thing as paper currency. How about helium-filled balloons? Because helium can escape almost anything. That if you take a helium balloon, go back a few weeks later, it is no longer in it. The balloon is worthless. Live cattle. Yeah, sure, you may have a system where you can reproduce, but without the reproduction cycle, 40 years from now, those cattle will not exist. How about Windows NT 3.1 on 22 floppy disks? Does that have any value today? And sugar. So we'll give a check mark here. Give a check mark here, here, and here. So now let's go on within the chart, starting off within the silver and the daily time frame. Start off within trend line analysis. This trend line, yeah, you could go like that just so it hits, but I'm not on the school of that. Still in a downtrend, but of course, since this period here, we do have an uptrend. So what has created is that of a symmetrical triangle where you both have an uptrend and a downtrend line both active. And it has to break one side either way. Along the way, we can count 1, 2, as of now, 3 higher lows, and 1, 2, 3 higher highs. For the first time, I'm not going to say ever, but in a long time, it got above this 18 average band. It's had one day where it stayed above the 18 average of closes, but now what we've seen is 3 consecutive days where the lowest day each is lower than what the previous day is. Now that it has broken past this resistance field here, it's now very clear to me that it's a possibility that this could be your classic failed breakout before the next leg lower. But as I was saying in the previous video, for me to really say that that's going to happen or likely to happen, I need to see it really go down below this previous low here. And it's like I say, it's still got a pattern of higher lows that if this low is not taken out and it retests this one in here, then of course the pattern of higher lows and higher highs would be in place. But the last few days have not been productive, to say the least. Now let's move this onto a very long-term perspective. And we're going to take a look at this on a 116-day time frame. With the exception of the current one, every single one of these days is 116 in total. And I saved this line here. Totally my mistake. Oh well. So I was practicing what I was going to say in this video. I drew it and I accidentally saved it with this line on. And what I was going to say, 2 things have not happened from this rally. From point A, the $1.27 lows and the $50.50 highs. 2 things has not occurred. The first thing that has not occurred is that rally to fail. For it to fail, it needs to hold and stay below the key 61.8% Fibonacci level. On the first test, it found support at it with a lower high. Then it hit it again with another lower high. Now it broke below it before, so it's not like, oh, it breaks below it, it's a failure. Okay, it broke below it. Now I want to see it hold and stay for that move to fail. Well, it made the lower low and then it resisted this. So now when you see a situation where it breaks below, comes to an area that was support, now resistance. When it resists that area, if it comes back and takes down that previous low, then you can say the move was a failure. But it never did occur, as this was the low. So one of the 2 things that did not occur from this rally was that it failed. The second thing that it did not do was extend the rally, at least not as of yet. In 2011, it almost came to the length of the 1980 highs. It has since pulled back about 60%. And it's, again, within this band here, which is, of course, in an upward trend. And the next chart, which will be gold, exact same time frame. Within this rally did not fail. But what it did do was extend the gains. And it did that right in here, broke below it, and then new high. Now when we look at the Fibonacci from the lows of 250 back in the end of the 1990s and the 1920 highs from last year, it has now found support at the level of, well, you can see here it says 1190. That's 76.4% or 23.6% on the way down. It is also the first time within this time frame that it has even went below the 18 average of highs. Well, this was the first time here, showing that this has been the largest correction it has endured since this rally has begun. Overall, still a very bullish, nice looking chart. Final chart will be the gold to silver ratio. Again, the exact same time frame. In 2011, when it made this low, it was at levels not seen since, well, 1980. And in 1980, it had managed to go back to its historic 16-to-1 ratio. Personally, when I look at this on a fundamental level based on how the ratio of gold to silver mined, which is 1 to 10, I consider this ratio to be quite expensive, which is why I've been waiting for years to get into gold, but I find gold way too expensive in the price of the 60s or the 50s, 40s, 30s. As in, you trade fine silver for fine gold. I'm waiting for it to come back down to this level. Maybe it never will. Maybe it will, but that's how I personally am playing the game. Now, overall, this is a fairly choppy chart. Since this high, you come down and you make a higher low. Then you make a lower high, higher low, higher high, lower low. And who knows if this is going to be a lower high or not. So therefore, if of course this thing does manage to get back up to 80, you might state, hey, this is that classic failed breakdown, and we should get maybe up to like 120, 130. However you want to look at it, of course, is up to you. But to me, there's not much to say within here. Other thing, though, is if you do make this lower high, break down below here, that this area would fail. But then in order for the move from here to here to fail, or from 14 to 101 to fail, it needs to hold and stay below this level of 29 3/4 for a significant period of time. And that's going to be a long ways away, if of course it even does occur. Thank you for tuning in to this weekend's chart analysis video, and I'll talk to you later on. Bye-bye.